Okay, very good. So now we have the recording. And I'd like to just do a short poll here so that I know who I'm speaking with. Let's take a look here. I'd like to know, what is your level of participation right now with power options and or radioactive trading? Okay, just your level of participation right now with power options or radioactive trading. And that's going to help me to pace this and know to whom I'm speaking, and also it helps me with further classes and presentations. So it looks like we've got a number of folks that have been to other radioactive trading webinars. We've got a big number of folks, bigger than I expected, that have already picked up the blueprint. Very nice. Not a lot of power option subscribers. Oh, okay, now you guys are showing up. We've got 48% of the room has now cast their vote, and looks like 46% now because a few more people came in. A few more people came into the room. That brings down the number. Okay, so I'm going to leave that up for about another 5 seconds. Don't want to take all of our time doing polls today. I'm going to be pretty sparing with the polls. But I do want to get your input, and I do want to answer your questions, okay? All right, so that's more than a minute. Let's go ahead and go through this poll just real briefly. 31% are Power Options subscribers. That's marvelous. What I'm going to do right now to folks that are live here is I'm typing out in the chat box, I'm typing out www.poweropt.com/RAT for radioactive trading. And all that is, that's a clickable link. I just sent it to you in your chat. If you're watching this at a later date, if this is a recording that you're seeing later on, just PowerOpt, POWEROPT.com/RAT for radioactive trading. And that link will get you a free 2 weeks, trial of the tools on power options. So kind of cool. Okay, 23%. This is my first radioactive trading webinar. Welcome. We're very happy to have you here. And there's a bit of overlap here because you could vote in more than one category. So we have a number of folks saying that I've been to other radioactive trading webinars and back, and you're enjoying it. Now that doesn't seem right here. We got 23% first webinar, 85% been to others. Well, maybe there's a little error in the poll thing as people were joining. Maybe that's it. Okay, 23% say that they're thinking of buying the blueprint. I highly recommend it, and you're going to see why that's a good idea today. And 62% have recently bought the blueprint. And for those of you that have it, you're going to be really appreciative, I think, of the income method that I share. It just gives a real good example. Okay, so let me go ahead and hide that. It's satisfying to me to know that folks that come to these free get-togethers get bulletproofed also. It's not just folks that have picked up the blueprint, but it's also folks that have come to our free webinars. The first time that happened was, oh gosh, way back in the early 2000s. I had a fellow from Singapore come in and take a look at my stuff, and then he ended up bulletproofing himself on the Qs and bulletproofing himself on eBay, and just doing real well. And he wrote to tell me about that, and I think at the time, it was when we were first beginning to publish the blueprint and so forth. I think I may have sent him a free blueprint. Now we charge for them, but that was a long time ago. Anyway, the fact that folks get bulletproofed after seeing our free information, that really is satisfying to me. Okay, today I'm going to analyze a recent trade by a fellow named Tom. I'm not going to identify his full name, or this may even be a pseudonym. Okay, but this gentleman wrote in recently, and Tom did very well. He could have done better with what I call the full Monty. If he had the blueprint or even some of our other products, like the bulletproof vest and the sketch and so forth. He could have done even better. All radioactive trading products, by the way, have a 100% money-back guarantee, so you're never at any kind of risk when you pick up a radioactive trading product. Now, in trading, what's the problem? The problem is a lack of control over losses. And in most of my webinars, I ask this simple question, and I'm going to go ahead and ask it again. I'm going to do a poll. The question is this: if you had picked the same year stocks last year with the same timing, would it have been a better year if? Okay. Well, hey, let's do this way. We're going to do a baseline. Okay, the baseline. What statement best describes your trading over the last 12 months? Okay. And hang on just a second, guys. I'm in my mountain cabin here in the woods, and there's a bunch of barking going on by some fella's dog here. So I'm going to close my door. All right, hang on. Okay, it's a shame too. It's nice and sunny out, and I kind of like the breeze. Okay, so so we've had a lot of that. A lot of responses so far. If you haven't responded yet, I ask you to just grab that and pick one of those. Did you pick more winners and losers and win last year? Did you pick more losers than winners and lose last year? Did you pick more winners than losers but still manage to lose? And that is a possibility. That does happen. But also, did you pick more losers than winners and actually still manage to win? And that is kind of the holy grail there, isn't it? I mean, rather than being right every time, hey, what if you just make money? What if you just make money right or wrong? Okay, and then, gosh, are you ready to quit just to stop the hemorrhaging? Now, this has been up for just over a minute. I'm going to go ahead and close that poll. This is our baseline, okay? 18% picked more winners than losers and won last year. Let's skip ahead to line 4 there. 9% picked more losers than winners, but still managed to win, okay? So these are folks that are either picking stocks, winning stocks more often, or even if they don't pick winning stocks more often, they're still winning, okay? But that's only 27% of the room. Line 1 there and line 4, these are our winners. Now, how about folks that lost last year? 36% picked more losers than winners and lost. And that's easy to understand, but 18% picked more winners than losers. They were right more often than they were wrong and still managed to lose money. And another 18% here say that, look, I am ready to quit just to stop the hemorrhaging. Okay, so that is our baseline. So here's the simple question. If you had picked the same stocks last year with the same timing, but never took a loss of greater than 5%, I mean, just go back over your record and say, okay, there's a loss, there's a loss, there's a loss. There's a loss. And what you do is you take away whatever number that was percent-wise, and you replace that number with 5%. If you never took a loss of greater than 5%, would it have been a better year? Okay? Think about that for just a moment. And we're going to show the practicals on that in just seconds here, okay? Literally, just seconds. All right, but I would like to get your input. What do you think? If you had played the same stocks last year with the same expectations, used the same timing to get in and get out, but when you got out of your winning trades, they were still winners. But when you got out of your losing trades, we would change whatever that number was. You know, maybe it's a 12% loss or a 7% loss, but then we would make it less than 5% for every single one. Would that have changed your year? Now, so far, 100% are saying yes. Okay, let me leave that up for another 5 seconds, and 3, and 2, and 1, and close. Nobody took me up on this. Nobody said, nah, limiting my risk to 5% wouldn't have helped me. Okay, but 33% said, yeah, I might have lost last year, but I would have lost less. Okay, 11% said yes, and I'd be ahead. I'd be ahead. Let me open this up a little further. I'd be ahead by as much as $500. 22% said yes, and I would have done between $500 and $5,000 better. And 33% said I'd be better off by $5,000 at least. Okay. Well, that's important. It's important for you to think about because I'm going to share with you a way to keep your losses under 5%. Okay, so let's do that now. we're going to look at Tom's trade, and it is a good setup. Okay, Tom was a viewer of our free webinars, and as far as I know, not yet an owner of the Blueprint, but hopefully he will be picking it up soon. Okay. And this isn't a bad setup, and it just says Tom's trade. All right, so so here it is. This was January 27th this year. Okay, and Tom likes MYL, and so he buys shares, and it's actually 200 shares and 2 put options. But just for simplicity's sake, I'm going to do everything in terms of 100 shares. Okay, because it's easier to follow the math. Okay, so he got shares of MYL at 56.76 and simultaneously bought the July, that's July this year, July 2015, $62.50 puts for $8.03. Okay. Now, that makes for a total investment of $64.79 per share. And since it's 200 shares, you know, that's about 13 grand. Okay. Now, what's guaranteed is that he's going to get back $62.50 regardless of what happens in the market. If the stock goes below $62.50 or stays below $62.50, he can get $62.50 for it. All right. But that means that the difference, the total amount that he has at risk per share, is $2.29. Okay. Now, since he's in 200 shares, that means that his at-risk amount is about $458. Okay. All right, so that's Tom's trade. It's not how I would have done it. I would have done it a little differently, and I'm going to go ahead and share that. But this does follow, kind of, the parameters that we set forth for radioactive trading. What Tom is doing is he's purposely limiting how much he could possibly lose in this trade. And a lot of folks will look at this and they'll say, wow, you know, you're spending $8 for the put. That's really expensive. Well, actually, no, because most of that he's guaranteed to get back. You know, about $6 of it or so he's guaranteed to get back because that put is higher than the price that the stock was trading at that time. Okay. Now, another thing that you might say is, hey, that stock has to move up $8.03 before it's worth anything. No, that's not true. Because we're buying a far away in time put option, the put option does come down in value, yes, slowly. But as the stock goes up, tick for tick, okay, the value of this entire position also goes up. And Tom also has available to him income methods, okay? So now I'm going to give you the power options view. And in order to do that, I've got to open up my web browser here, okay, and go on over to, this was mine. Okay, this is Tom's, okay? So here we have the same numbers, 56.76 for the stock, $8.03 for the $62.50 put option. And what that does is that puts Tom into a position where if if MYL goes up, it's unlimited, it's infinite, the amount that he could gain. But the amount that he could lose is only 3.5% or less. Okay, 3.5% or less. Now, this blue line is the value at expiration, and that's a good thing to pay attention to. Okay, but this red line is the value halfway between today's date. Okay, when I put this together just now, today's date and expiration in July. Okay, so if he gets out early, okay, look at that. If he gets out early, whether his stock is winning, he'll make more. Or whether his stock is losing, he'll lose less. All right, and so that's kind of an important thing to understand there. Okay, all right. So let's go back to the slideshow. If it had been me, I would have done this instead. All right, I would have picked up, instead of buying. Here it is, $8 by $8.40 at the end of day data. And as we saw just a moment ago, Tom got in at 803, but he also had a little higher stock price. At the end of the day, because that's the only data I've got access to, I'm going to use this. If Mylan Labs is in the $56 range, which it still was, it was just a few cents less than earlier that day when Tom got in, if I was getting into Myland Labs and it's around 56.37, I'm going to probably pick up the $60 or the 57.50 puts. But let's just say that it's the it's the $60 puts, and that I get filled right in the middle of the spread here, okay, with a limit order all day long. I'm holding out for $6.50. Would you go along with me? Let's say that I'd probably get filled, okay? Probably get filled with that. And so what we're going to do is we're going to look at Tom's trade, and then we'll look at my trade. Tom's trade, he picked up shares at 56.76 and the puts. And so he ends up with a total amount at risk of 3.5% or $229. This is mine. It's not much different, not a whole lot different, but we're going to use the end-of-day data. For the record, I did not do this trade. I'm just comparing. I'm just showing you what the value would have been to Tom if he had had the blueprint, okay? Because he won. He did very well at this. He's bulletproof, and he's still in that stock. But just would have done better if he'd have done it my way. Okay, so we've got MYL. I'm using the end-of-day data, 56.37. Rather than going for the 62.50 put, I would have probably picked up the 60s. And here's why. Because it's a lower total investment. It's still guaranteed. But 287 is the most I could lose, and I'm still under a 5%. Okay, we're still under 5% that we could possibly lose, and so that's a good way to go. Okay, all right. So I would have done it this way. Tom did it his way, but that's beside the point. I do want to laud Tom for his awesome insight, and what he did was he did a good job waiting for his opportunity. And because what he knew for generating income was income method number one, which is selling a covered call, he did pretty well. Now, there are 12 different ways that I use to take income out of a married put, and this is just one of them. Okay, and most folks know about covered call trades. By the way, I'd like to just do a short poll and see who does covered calls. Okay, instead of a poll, let me just have you shout out. Okay, I'm going to open up the question box here. We'll take a look at the question box and see what's going on. Very good. Okay, so Asim does covered calls. Alan does covered calls. Okay. You know what? Just for fun, can I ask you guys how you're doing? Tom doesn't. Tom says, no, I don't do covered calls. Dick says, I did do covered calls. Maybe you quit drinking the Kool-Aid there, Dick, and and now this. Very good. Okay, Dick says, now I'm doing this. All right. Let me run a quick poll, okay? And I would like to only include the folks that had done covered calls for like 2 years or more, okay, just 2 years or more. And can you tell me, have you made 3% per month for 24 consecutive months, or 6% per month for 24 months? Have you done that? Because that's what they promise on those websites. That's what they promise in those seminars, that you're going to be able to come, and regardless of market conditions, you know, and whatever, you're going to be able to make 3% per month. Now, I should qualify this, because some folks already answered. I should qualify this. 3% per month for 24 months means that you have 100% more than you started with. So if you started with $10,000, you now have $20,000 that you may make a withdrawal on today. Okay? And if you made 6% per month, you have, if you started with $10,000, you now have a $40,000 account that you may withdraw, that you may close today. Okay? So if you're really honestly doing that well, I'd like to know. Okay, let me leave that poll up for just a few moments here. Some folks revised their answer. The reason I can tell that some folks revise their answer is that now we've got different numbers. Okay, so let me go ahead and close that poll and share the results. We did have somebody come in. Now, only 16% of the room qualified to do this, right? Only a small amount of people said that they you know, have traded for 2 years or more this way. And then we've got 17% saying, awesome, I made 3% a month for 24 consecutive months, so you doubled your money. Or another fella said that he quadrupled his money. Okay, so it's one fella, all right? And then I think they revised their answers later on after I defined that for them. 3% per month compounded is 100%. And 6% per month compounded is 300%. It's quadrupling your money. And we had some folks go ahead and change their answer. Okay, so anyway, 33% say I'm ahead, but not like what they told me. And another 33% said, I don't get it. I'm losing money, and I want an explanation. Okay. Well, here's the deal, guys. If you do trading covered calls, and that's all you know how to do, you do cap your upside. And you honestly don't do a very good job of protecting your stock. It actually acts as a sorting machine where you sort your winning trades out of your account, and you get to keep the losers. And to me, that doesn't seem like a wealth option. Now, Tom has done very well because what he did was he waited to sell his covered call, and he was doing his covered call as a part of doing this married put play, okay, that we call an RPM. It's a radioactive profit machine. It's a stock protected by a put option, and then he sold a covered call later. So it wasn't until March 12th. MYL spiked, and Tom sold the April 62.50 call for $2.92. And let's take a look at what that looks like for him. Okay, it's the April 62.50 call. So again, I've got to open up and go to here. Now, this is Tom's trade. Okay, now we're going to add an element to this trade. This was his opening, end of January. Okay, and then on March 12th, the stock goes up to, $62 and change, and so he's able to sell the 62.50 call, and he was able to get $2.92. Okay, so let's take a look at what that does to his position. $2.92, and submit. Okay, good. So now what we've got here is kind of a bulletproof position. It's kind of cool, okay? What happens is he had $2.29 per share at risk, and now he's collected $2.92. Pretty cool? $2.29 is what he had at risk if the stock crashes, but now he's picked up $2.92, okay? Now, what this does, unfortunately, it does put a cap on where the stock can go, but do you see that he can't lose? It's kind of exciting. He has negative risk. He has negative 1% at risk. And if his stock ends up in April expiration, if it ends up right at $62.50, his profit, his net return is going to be 8.5. Now, that's not where the stock happens to be right now. It happens to be at 60. And if it stays at 60, his profit will be less. All right, his profit will be less. But this is still a very happy situation, isn't it? So why don't you guys tell me what you think about that? Oh, that's a very good question. Jeremy or Jerome, I'm not sure how you pronounce your name. Jeremy says, does Power Options have a paper trade account where we can practice options trades? Yes, they do. And I don't own Power Options. That isn't my business, but I'm very, very pleased with Power Options. I was a customer of theirs for a number of years, and then all the guys in the office, once they caught wind of what I was doing, they began trading radioactively. And so later on, we formed a partnership, and it's kind of cool. So yeah, good question. What else? Do you guys appreciate that? Do you like this bulletproofing idea, being in a place where you can't get hurt and yet you can still make money? I'd like to point something out. This put option protects Mr. Good-Looking's account, Tom's account, all the way until July. But here in April, this call is going to expire, and he may be able to buy it to close, or it may expire worthless, but then he may be able to do other income methods. Kind of cool? Kind of cool. So his at-risk amount right now is negative $61. He cannot lose. Okay, kind of cool. So let's go back to the slideshow here, okay? Today is March 31st. That's when I'm doing this broadcast. Okay, it's March 31st, a little after, let's take a look at the clock here. A little after noon. It's about 12:26 on the East Coast, okay? April expiration is still a bit away, so we don't really know what's going to go on for him. If his stock crashes, he's very likely going to be able to get out, and he'll definitely get out with a profit if he either exercises his put or if he sells his stock and his put separately. Okay, so he's really in a place where he can't lose. Normally, though, I'm going to say that income methods are performed a little nearer in. So rather than doing an income method like, you know, it was March 12th, and he was doing an April deal. I would like to have seen him do a March play. I would have liked to have seen that. Okay. And now Tom has been in contact with the Power Options office, because everybody in the office there at Power Options, they trade radioactively, and so they know how to do it. But he could have done much better, pardon me, if he had more ideas. He could have done much better if he had more ideas. Now with 12 different income methods, we've got a few to choose from. Here's one I'm going to share with you today. On the same day that Tom put together this play, the very same day, he might have gone ahead and used, income method number 5 instead of income method waiting and doing income method 1. Now, income method number 5 goes like this. You're going to sell 2 calls and buy 1. Looking at this spread, I'm going to ask you to go along with me on something, okay? I'm going to ask you to go along with me and believe that I could probably get $1.10 if I'm selling 2 calls, okay? Use a limit order, sell 2 calls at $1.10 rather than getting, $1.06. Maybe I could get $1.10, right? Would you believe that? Okay. And then also, rather than picking up this 57.50 put for $2.09, how about I be able to pick it up for $2.05? That's definitely within the realm of, yeah, I could see that, right? Okay. So here's the deal. Income method number 5 is called the money net because it's done at a credit, but you might close it at a credit also. Okay, kind of cool. So here's January 27th, 2015. And in order to do this, we sell to open the 2 March 60 calls, which I just showed. Okay, they were trading at $1.06 by $1.18. And I'm thinking, okay, we could probably get 4 more cents than $1.06. Okay, so $1.10. And so we pick up $2.20 premium. Now, using most of that premium, again, these were trading at $1.93 by $2.09. I'm going to say we could probably save 4 cents and get it for $2.05. Okay, and so we're buying to open the March 57.50 call at $2.05. And what this does is it generates a small credit of 15 cents. Now, that may not seem like a really big deal, okay, but it is something, all right? And this was the same day that Tom put together his MYL RPM, his radioactive profit machine, okay? So now I'm going to go ahead and show those numbers giving the 15 cents credit. It's not going to be a very huge change, all right? But let's go over to my trade. My trade, I'm entering, and instead of risking 3.5%, I'm risking 4.6%. Okay, all right. And so now we're going to subtract 15 cents here. Okay, so now it's 22 cents. Why? Because we've collected a credit of 15 cents. So we've reduced the cost basis on the stock. All right. Now, it doesn't look like it's changed too much, and it really hasn't. Okay, instead of 4.6% we could lose, now it's 4.3% we could lose. All right, but that's where we're going to start with this. Okay, all right. Now, on expiration Friday, MYL went up. Okay, MYL is at $63.06. And we've got short calls at $60. Oh my gosh, what are we going to do about that? Well, what do you normally have to do about that if you're trading covered calls? If you want to keep the stock, you're going to have to buy to close those calls. And here's what I'm going to say. I'm going to say that with it at 63.06 with a limit order, could probably close it for 310. Now, in the case that we didn't, well, shoot, we could just buy back into the stock, and it would be the same effect. Okay, but the point is this: we're closing for 310. Okay, and we're going to finance that by rolling the call. We're going to roll that short call. We're buying back at 310, and we're going to sell the April 60 calls at 420. Okay, and what that looks like is it looks like another $1.10 income. Okay, and so what I'm going to do is open up here, and we'll take a look at this, another $1.10. So that would reduce our cost basis here from $56.22 to $55.12. Okay, $55.12. And we've got to introduce the fact that we're selling the April $60 call. Now what I'm going to do is I'm going to set the value at 0. Okay, I'm going to set the value at 0 because what I've done here is roll the call, right? I rolled the call, and we picked up the $1.10. Well, I already accounted for the $1.10 by taking it off the price of the stock. Okay, so we're just going to make it look as though I'm getting 0 cents for that. Okay, so what's that do to our position? It gives us this position, which doesn't look better than Tom's, does it? It doesn't really look better than Tom's. Okay, and that's okay because I haven't shown you the whole story. Okay, like I said, it looks like another $1.10 income, and you saw me take off the $1.10, and you saw me take off the 15 cents earlier from the income methods. All right, and we just saw that view. Well, let's go ahead and look at the view again. All right, the view doesn't look as attractive. All right, but there's something about income method number 5. We call it the money net because when you set one of these traps, you set the money net, you do it at a credit, and it's very possible that one of 5 different ways you'll take a second credit. So let's not forget that, okay? Here's what happens, okay? On January 27th, this is what we did. We sold to open 2 calls at $1.10 apiece for $2.20 and used most of that to buy to open a March 57.50 call at $2.05. So now we're left with 15 cents credit. We already looked at that, okay? But at expiration, what happened? We bought to close 1 short $60 call and rolled it. We bought to close 1 short $60 call and rolled it. What's that leave? Well, that leaves in place a long 57.50 call, right, that we were paid to own, and a short $60 call, an obligation to deliver stock at 60. And we've been paid to own this, you understand? Now, with the stock at $63 and change, I'm going to say it's a certainty that both of these close in the money because it's expiration Friday and the stock is over $63, okay? So here's what happens. In the middle of the night, my broker buys shares of MYL at $57.50 because, after all, automatic exercise of my $57.50 call gives me that right. But there's also an obligation. My obligation is that I've got to deliver those shares at 60. So, again, in the middle of the night, my broker does this on my behalf. It's called automatic assignment. Automatic exercise is when you buy. Automatic assignment is when you sell. I'm being assigned here at $60 and then get to keep the $2.50 credit. Oh, hello. So now let's go back to this view. And let's simply subtract the $2.50. So what will that be? That'll be $52.62 is what our cost basis has been changed to. And what's called bulletproof. By the way, the green is the present price, okay? And if I choose to, you'll notice that if I choose to unwind this trade, I can unwind it right here. I can unwind the, what do you call it, that short call, and still have a bulletproof position, and from there launch other plays. It's kind of cool. Our maximum risk is less than 1.5%. Okay, or I'm sorry, let me say that again. Our maximum risk is negative 1.5%. So that's a little bit better off. All right. We took less to get into this play in the first place, and we're taking more because we know income method number 5. So knowing the blueprint or having the blueprint, you would be able to set these things up better, and you'd be able to execute your income methods better. And that's the point that I wanted to show. All right, so we're having a couple of questions come in. So let's take a look here. Instead of rolling the stock over, can't you just sell the trade? If the underlying stock is $56.22 and the stock went up to $60, wouldn't that 310 be profitable before expiration? I'm not sure what you mean. Can I just sell the trade? I'm going to continue to own the stock. Maybe you could rephrase that question there, Jeremy. I apologize for not getting it on the fly here. What I'll do is jump back into this deal here. We've just shown that. Now this April expiration is yet to come, and so Tom is in a place where he is bulletproof, and it's good. He spent a little too much, I think, in my thinking, to get into the play, and he also didn't do as well as he might have, having more than one income method at his disposal. Okay, but this April expiration is yet to come. It does look good, doesn't it? He's bulletproof, but there's 3 more months that he could do other income methods after April expiration. Okay, Tom's in a good situation. Last I heard, he was still bulletproof. He can win, but he can't lose. But let me ask you this: what do you think of the income method number 5 play that I shared with you? Okay, let me ask you that. What did you think of the income method number 5 play that I shared with you? Boom. Let me throw that up there. I'm going to address the questions again here. Okay. Jeremy says, I'm sorry if I confuse you. I'm as green as the grass on my lawn. No, go ahead and pose your question, maybe in written form, longer written form, to support at radioactivetrade.com. We're always real good to turn that back around as quick as possible. The point that I was making is that we can certainly own the stock, own the put option, use an income method to pay for the put option, and be in a place where we're bulletproof, and yet, after April expiration, we're going to have 3 more months that we could apply other income methods. Kind of cool. Just for grins and giggles, I might show you the graph. I won't show you the play, but I'll show you the graph that income method number 12 would have played here. Okay? Income method number 12 would have done. Okay. Did I close that poll? Is that poll still open? Yeah, it is. Let me close it. 3, 2, 1. Close. Okay. So 17% said that was wild. I didn't know you could do a riskless spread. Yeah, see that ratio call spread that I did, normally a ratio call spread has infinite risk. It's because you're selling 2 calls and buying 1. But when we sell 2 calls and buy 1 in the context of also already owning 100 shares of stock, well, doing the ratio call spread is itself a riskless play. It doesn't add any risk to the position, but it does give you this cool benefit where you might be able to take 15 cents credit now, $2.50 more credit later, so a total of $2.65 credit, where Tom was able to just pick up, $1.10. Okay. All right. 58% said this one trade made it worth all the time I spent here today. Great. Okay. And we're not finished. 50% want to know more about riskless spreads like this. 17% want to know, can I do what you just showed in an IRA or similar account? It's going to depend on the rules of your broker, and it's going to depend on the laws of your nation. So, for example, I'm not sure if you can do this particular play in Canada, but that's okay. We have 11 other income methods. Now, as far as being able to do this in an IRA in the U.S., yes, but it's going to depend on your broker. Whoever is the custodian of your account, your IRA account, will know that some of them will just say, no, we just don't do that. We don't do spread trades. And others will say, yes, we do spread trades. We just can't do them with margin, so it has to be secured. And when they see that your stock is securing the second call on that play, they know that there's no margin being used, and so therefore it doesn't break the rules of an IRA. That's a long answer, long way of just saying it depends. Depends on your broker. And if the broker that you have doesn't understand this, it's time for a new broker. Okay, 50% say, I especially like reducing the risk, but is it really possible to go to zero? Yes. As I just showed you, we have less than zero risk in this play. And so does Tom. I'm going to go over to Tom's. To be fair, Tom has got less than zero risk in this play. It's just not as good a picture. You know, he spent more to get in, and he's guaranteed less out. Okay, look at this. Spent 6187, right? Whereas we're spending less to get in, and we have more possibility that we can get out. And that's just the difference between having the blueprint and not having the blueprint. Okay? And now we're going to do, I'd like to thank you for joining me today. We're going to take apart another play on Thursday, and maybe it can be one that you provide. All right? If you haven't gotten the blueprint yet, I'm going to recommend it. All right? Particularly if this bulletproofing idea appeals to you. Bulletproof means that you're in a position with your stock and your put option that now your stock cannot lose. Okay, well, the stock can go down, but it can't hurt you, right? And we really appreciate that around here. In this particular play, Tom had 200 shares and 2 put options, and if he had used my setup, it would have taken $384 less for him to get into the play. So he did the general idea, and you can get the general gist out of coming to these webinars, yes. But if he had just been able to tweak this a little bit, known a little bit more, it would have cost him less to get into just this one play than the blueprint would have cost him. Okay? And also, if he had used my income methods, he would have taken more off the cost base of the stock as well. So both ways, owning the blueprint beats not owning the blueprint. So what about you? Do you want to play around with trying to figure this thing out, or do you want to get a head start? You know, I've been doing this live for over 10 years, and we've had thousands of people pick up the blueprint, write us in with their own experiences, and we've developed it from, we began with 4 income methods and now have 12. Kind of cool. If it were me, I'd go for door number 2. I would want to have the blueprint and all 12 income methods, and you know, if you want to be creative and so forth, come up with income method 13 rather than trying to bushwhack it, you know, from the beginning like I had to. All right? So here's the information for the best offer that we've got going for the blueprint and the home study kit. It's radioactivetrading.com/iridium. radioactivetrading.com/iridium. Okay, so let me go ahead and take a couple of questions. Sil asks, can you do a 30-second recap of your trade for a late login? Yeah, Sil, I'll go back here in just a minute and do that. Let me be fair to the other folks that have been here and take their questions first, though, okay? All right. Tom asks, what's the difference between the blueprint and the home study kit? Tom, it has very little to do with content and everything to do with how you process information. If you want to really cut down the learning curve and you happen to learn best in an audio-visual type format, I'd say that the home study kit is what you should get. If you think that you can get everything just out of reading a book, then the blueprint is a better value. The blueprint is $339. The home study kit is $599. So $260 difference. But you know, as we just showed, just the difference between owning the blueprint and not owning the blueprint was over, you know, it was $384 in just the setup in this one trade for Tom, you know. So gosh, you know, if it's worth it to you to learn something quicker and be able to apply it sooner than the home study kit. But if you think, man, you know what, I'm just going to read, then the blueprint is a better value. Just be real honest with you. Great question. Okay, other questions? Let me throw a poll out there, and then I'll do a quick recap on the trade for Sil. All right, so just this will be a final poll. I said I wasn't going to go crazy on the polls today. I've got 10 of them loaded up. This is poll number 6, and I'm going to stop here. No more polls. I'll take another question or two, and guys, we're going to probably finish here. All right, let me go real quick while that poll is filling out. I'm going to go to radioactivetrading.com. Just give you a recap of what's available there. If you think of a question that, just like when you hang up the phone, you think of the perfect thing to say. If you think of a question that we haven't covered here today, go ahead and send that question to us at support@radioactivetrading.com. Okay, so let me go ahead and close that poll in 3, 2, and 1, and close. Now, this is going to add up to more than 100% because you could answer in more than one category in this particular poll. Let's see. So 9% said, 9% say, I don't know if it's worth it. Let's hear the offer. All right, let's hear the offer. That makes sense. And 27% say, wow, this is just what I was looking for. Yes, it's exactly what I would have been looking for just before I lost all my money and covered calls plays. In the late 90s, I was following directions, and I was trading heavily margined. And I was just following directions from my covered call play guru, and I got in trouble. If I had had this information back then, it would have made all the difference. 9% say, I've paid over $3,000 for a less complete solution. And then 82% say, I like bulletproofing. Me too. Okay, so we've got a question here. Do you show how to get in trades, and how do you close the trade? Jeremy, that's covered in great detail in the blueprint. If we wanted to close this trade right now, let's go ahead and take a look at it. Is everybody seeing my screen? Let me just ask real quick, if you're seeing the screen. Do you see me wiggling my mouse around over there by where it says radioactive trading? I want to make sure that you can see that. Not yes. Okay, good. All right. So getting out of the trade. If we wanted to get out of this trade right here, right now, if we wanted to close it right now, what we could do is buy to close the call, and then also sell to close the put option and sell the stock. And that would give us right now a profit of $393. If we weren't impatient, we were okay waiting another 2 weeks or so, we might be getting 521, but then again, if the stock goes up or the stock comes down, it might end up differently. Alternately, what we could do here, Jeremy, is we could buy to close this call only and then apply one of the other 12 income methods. Now, I'm going to have to blank the screen for a second because I'm going to insert income method number 12, okay, and show you what that looks like. But I can't give you the details on it. Okay, it's too good stuff for us to be giving away free. Okay, so how am I going to blank that screen? Well, you know what? I did say. I did say no more polls, but I'm going to go ahead and break that promise. And you know why? Just so that I can blank the screen here and show you income method number 12. So I'm going to give you another poll. This is a prepared poll. Our free attendee that's featured here is Bulletproof. Okay, and do you agree that the free webinars have real value to them? Okay, because he was able to bulletproof. You might be able to bulletproof also. Okay, and I'm adding, I'm putting in income method number 12 here. Awesome income method number 12 play, which I'm not going to show everyone. Not everybody gets to see this. Okay, and all right, great. So I'm going to close that poll. It's a bygone or foregone conclusion, whatever they call it. Okay, everybody agrees. Yes, the webinars have real value to them. Okay, all right. So thank you, appreciate that. And just the follow-on that was going to go with that. Do you think that having 12 income methods would be more useful than just one or two? And so the answers to that are duh. Having 12 arrows in your quiver beats just one, or no, I think that knowing how to do cover calls is enough. And with that, I'm going to, after that poll is finished here, I'll just leave it up for another 10 seconds. It's another foregone conclusion. I'm going to go ahead and show you income method number 12. Oh, surprising. Okay, look at that. Surprising. Okay, let's give it 3, 2, 1, and close. This is what's surprising to me. 7% of you that participated in the poll, 37% said, nah, I think knowing how to do cover calls is enough. Okay. All right. So let me go ahead and show you. This is income method number 12. All right. Income method number 12 is another bulletproofing opportunity. But what is really cool about it is by manipulating, we've already manipulated the price by using other income methods and then adding in on a spike, adding in a separate put. And what that has done is it's made it so that at expiration, the worst that we could possibly do is if the stock closes right at $60, the worst that we could do is a profit of $3.13. But if we get out sooner than that, we'll do better. And so our aim is to get out sooner. But the thing is, now our trade is no longer dependent on direction. It's just dependent on movement. If your stock goes up or down, we end up doing even better. And so that's the effect of income method number 12. And if you're interested in that, you'll have to own the blueprint. So let's see here. I did want to show, here's radioactivetrading.com. And our last slide, it said Iridium, /Iridium. Radioactivetrading.com /Iridium. We don't ever discount the blueprint, but what we do is offer bonuses. And the bonuses that are available right now are incredible. So, okay. Oh, it says blank screen. Sorry about that. I wonder what I did. Is it a blank screen? Is it still a blank screen there, John? I'm trying to show Iridium. Radioactive Trade is still a blank screen. Oh, but Rick sees it. And Jeremy says, I got a screen. Tom's got a screen. Okay, all right. Well, I see it. Okay, good. All right, so folks, let me go ahead and take you here. This is radioactivetrading.com. If you just go to the products tab, you're going to get the plain vanilla offer, okay, for the blueprint and the home study kit. There's our plain vanilla offer, all right? But if we do this, if we make this little adjustment, Iridium, IRIDIUM, and plug that in, we have the same products. We've got the home study kit and the blueprint, but with piles and piles of bonuses. And if you'd like to read through those, it'd be fabulous. Okay, I'm not going to do a big job of selling here. I think it just makes sense for you to go over to radioactivetraining.com, see for yourself, maybe read some of the testimonials, and decide to pick up the blueprint. So, okay, now I guess I did make a promise. I just was reminded of it. I was supposed to go through the numbers for SIL, and so I'll do that. Okay. We'll go through the numbers here for SIL, and this is actually, gosh, formally, this should be the end of the program. This is the end of the class. Okay. Let's do this. So here's income method number 5, and the way that income method number 5 is done is that we we already own stock and a put. Okay, that's a given. We own our stock and our put. And according to some parameters that are included in the blueprint, there's specific strike prices that we should and should not sell, okay? All right, in this particular case, we should sell the 60s and buy the 5750s. And here's how that plays out here. $1.06 is the bid, $1.18 is the ask, and I'm thinking we could probably get 4 cents. I'm thinking we could get $1.10 for those guys. And at the same time, pick up one of these for $2.05. Okay, see, that's 4 cents discount off of that that ask price there. Okay, so with a limit order, we do this. We sell to open 2 60s at $1.10, netting $2.20. And then we use that $2.20 to buy a March 5750 call. And so now we have $2.05 spent. So it's a credit of 15 cents. All right. Now, later on, this is for SIL. I'm just saying later on, MYL is at 63.06. So if we want to keep our stock, we're going to have to buy to close one of those calls, right? So we buy to close one of those calls, get it for 310, and to pay for that 310, we're going to sell to open at 420. So it's like we've received another $1.10. We got 15 cents earlier for the ratio call spread. It's like we got another $1.10 here for rolling one of those calls. Okay, so $1.25 total. But let's not forget this. When we did income method number 5, we created a money net. The money net is where we got paid 15 cents to have one long call and two short. When we rolled one of these short calls, what was left? What was left was one short $60 call and one long $57.50 call, and we've been paid to own it. And then what happens is it's expiration Friday when we're doing this. So the long $57.50 call is in the money, and the short $60 call is also in the money. So in the middle of the night, our broker buys 100 shares at $57.50 and simultaneously sells 100 shares at 60, and so it generates another $250 in credit. That's what we call the money net. And the way that I showed it is one of 5 ways to play a money net trade for a second credit, and a higher credit than a covered call could possibly have gotten. So cool. All right, folks, I'm going to answer one more question, or 2 more, it looks like. Okay, so Tom says, so the study kit has all the material that's in the blueprint. Yes, the study kit has the blueprint plus. And what the plus is this. It's the blueprint for reference, right? But then there are a number of audio video CDs that explain all of the income methods in this way that you're seeing right now. You know, the dynamic method where you hear the voice and see the charts and so forth all at once. Okay? All right, cool. Thanks, Kurt. Really good, says William. Thank you, William. We appreciate your presence as always. And folks, I think this is as good a place as any to end our class today. We're not quite at the top of the hour, but I know that some of you probably have things to go and do. So let me encourage you to pick up the blueprint again. Here it is. The link that you'll want to go to is this, www.radioactivetrading.com/Iridium. Rhonda says the CDs are not Mac compatible, right? I don't believe that's so. I think that they are Mac compatible, Rhonda, and if not, we can certainly figure out another format to get it to you in. But I think they're Mac compatible. Okay, folks, I'm going to go ahead and sign off for there, and I want to thank everybody for coming. I'm going to wish you happy trading. Go to Iridium and pick up the blueprint. Sil says, thanks. Lots of info. A replay of this and a pot of coffee would be nice. We'll look for the replay up later today on radioactivetrading.com. All right, I'm Kurt Frankenberg. Sign out for now. Happy trading.